Yes. Thank you so much. So welcome everyone to this session on financial awareness for all our female colleagues. This is the onset or the beginning of our week-long Women's Day celebration, and we thought that why not start it with the most important topic of financial awareness. Now you might all be thinking that at Clevertap we have been doing it in some form or the other, right? Saurabh had been doing facilitating many sessions. We also had our EAP partners do such sessions, other partners on financial awareness helping us around. But then we thought someone expert on investments to bring on this forum. And as females, I know for myself that I am expert on savings, okay? But then I'm a big zero right now on investing, okay? And I'm sure there would be few people here in the audience. Please pardon me if I am taking this just as a doubt. But then we all know how to save money. But I think we fear or we hesitate, we have somewhere lack of knowledge regarding investments, and so we thought that why not bring an expert to this platform. And here we have Gaurav Singhvi. I'm sure you would have gone through his profile I had shared, and he comes with a decade of corporate experience. He is an MBA finance, also has PG diploma in international business and finance. He has worked at HDFC, Kotak, ICICI Bank, and then now holds a lot of experience in investment, mutual fund, equity, etc., etc. So I would now hand it over the session to Gaurav to take it forward for our audience. And also, one more last point, Saurabh is also here to assist us for any question queries. We thought to bring our internal expert also on this platform. Okay, over to you, Gaurav.
Thank you, Shalika, for wonderful this introduction. So I'm sharing my presentation. So first I want to know how many of you are the married with kids. You can answer me on chat box.
So Gaurav, kids are important or married is important?
No, kids are more important than married.
Okay, we have Geeta saying me, Sambhavna 2, 3, 4, 5.
Yeah, yes.
6, okay. One count me, Anam, 7.
Sure.
So roughly 7 to 10 you can consider.
Yes. 50% of the audience are married and some have children.
Yeah.
So welcome you all on the exclusively live webinar on 7 steps of financial planning for especially on women, as you are going to celebrate tomorrow as International Women's Day. So let's start with presentation within simple story. Yeah, दो picture है. In one picture there is a baby sitting in the lap of her mother, and second the baby is playing at a play school. So my question is कि baby कहाँ पे ज़्यादा safe है? Where is the baby is most safe? At her home or at playgroup? You can give me your answer in chat box.
I encourage people to unmute and speak. That
yeah,
the session.
They can speak, or if they can give answer on chat.
Yes, please go ahead. Yes.
At home.
At home. Shilika?
I would say that the person needs to, like the kid needs to go ahead, mingle with other kids. Otherwise, no social network forming, no social.
I'm just asking about the safety first.
Safety, obviously, at home.
Okay.
But then other things are also.
Okay, I got answer, almost 7 to 8 answer of home. Similarly, the growth of the child is into playgroup or home. The growth, the development, the learning, it is available at home or in playgroup. कहाँ पे child का development होगा, growth होगा, learnings होगी, नए friend मिलेंगे, नया कुछ सीखने को मिलेगा.
Everyone answering on chat window, playgroup.
Playgroup. तो similarly जब women and money management की बात करते हैं ना, तो women की एक problem है कि वो savings ही करती है. ठीक है, तो जैसे अपने पैसों को अपने पास में रखना, जैसे बेबी को अपने पास में रखते हैं, वो एक one kind of savings है. अपने पैसे अपने बैंक में रखना, एफडी करना, उसको कोई इन्वेस्टमेंट नहीं करना. अगर आप अपने फंड्स किसी और को मैनेज करने के लिए देते हैं, चाहे इफ यू आर इन्वेस्टिंग इनटू म्यूचुअल फंड्स, इफ यू आर इन्वेस्टिंग इनटू बॉन्ड्स, ईटीएफ और सम स्टॉक्स और समथिंग एल्स, तो उसे इन्वेस्टमेंट्स है. जब आप अपने फंड्स किसी और को देंगे तो उसका ग्रोथ या डेवलपमेंट ज्यादा होगा, जैसे बेबीज का ग्रोथ या डेवलपमेंट प्ले ग्रुप में ज्यादा होता है. तो आपको अपने फंड से अटैचमेंट हटाना पड़ेगा और उसे इन्वेस्टमेंट की ओर देना पड़ेगा. So what you will going to discover in this webinar is 3 things. Okay, what are the common financial mistakes you should avoid? Second, how you can become financial free in 10 to 15 years by adopting these 7 steps of financial planning. And the third thing is how to manage your cash flow effectively so that right amount of money is always available at right point of time. So this is my introduction already given by Srilekha, so I'm skipping it. So we are a mission-driven organization, and our mission to educate, empower, and train 1,000 people about financial literacy so that they can live a financially confident, happy, and stress-free life by managing their money. So we start with presentation with financial planning, the concept of the financial planning. So I want to know what is the financial planning? Any simple definition you know? You can unmute and give me answer also. Saurabh, you can also participate.
I would have all the answers maybe, but
Yes,
yeah, Priya, go ahead.
Yeah, financial planning, in my opinion, is making sure that you have the money at the right time when required. So yeah.
Okay. Any other answer? Srilekha, would you want to add something?
I think on the expectation setting, you already set it, the right amount of money at right time. And this requires financial planning.
Yeah, definitely. The financial planning is a process which ensures that right amount of money is always available at right point of time. The right amount of money may be required to buy a home, to buy a car, for kids' education, for retirement, or for some vacation. When we have some goals, we should have a availability of that funds at particular time. So it is called the financial planning. So there are 7 steps of financial planning. So I start with the first step of the financial planning, which is planning for the unplanned events. हम सब अपनी लाइफ में जो चीज प्लान होने वाली है, जैसे if you want to buy a car, if you want to buy a home, or if you want to go for a vacation, हम वो सब चीज प्लान करके करते हैं, बट हमारी लाइफ में कुछ चीजें ऐसी होती है जो कि अनप्लान होती है. तो अनप्लान इवेंट्स को सबसे पहले कवर करना चाहिए ताकि अपने फाइनेंशियल प्लानिंग को पहुंच सके. तो फर्स्ट स्टेप है आपकी फाइनेंशियल प्लानिंग की अनसर्टेनिटी को प्लान करने के लिए कि टर्म इंश्योरेंस. मैं एक पोल रन कर रहा हूं, आप उसमें पार्टिसिपेट कीजिए. I have launched the poll. Do you think you and your spouse have adequate life insurance?
Folks, I hope you are
I
able to
have got
view the
15 answers, 16, 17, 19 answers, 20, 21,
great.
23. Last 5 seconds. So there is a 25, 26 observation. I am just ending poll and showing you result. So 60% don't have adequate life insurance for them or for their spouse.
So what should be the definition of adequate here, Gaurav?
Yeah, I'm giving you all this information. Just I'm asking them whether they have a life insurance or not. Now I'm giving you that what is the definition of term insurance also and adequate life insurance also. Suppose you are a salaried person and you are getting in one yearly income of 1 lakh rupees. Out of your monthly income, you are going to expense all these things: food, housing loan, EMI, bill, holiday, travel, car installment, medical, clothes, and education for your children. Suppose the bread earning member of the family is no more. If suppose he is died due to some reason, then the family earning will be might be 0 or might be the single income. If you are a working couple, then if someone dies, then there might be one income. So how we can recover this loss to our family? By taking a term insurance. So term insurance is a simple form of insurance in which you are paying a 10-15,000 rupees of a premium and you are getting a cover of 1 crore or 1.5 crore rupees. So who require the term insurance? Basically the earning member of the family require the term insurance. Term insurance should be minimum 20 to 25 times of your yearly expenses. And it should be minimum 10 to 15x of your annual income. So, Saurabh, I am giving your answer. If suppose my income is 1 lakh rupees per month, so my annual package is around 12 lakh rupees. So if I need an insurance of around 1.20 crore to 1.80 crore rupees. Why I need this? Because if I put 1.80 crore rupees or 1.50 crore rupees into some bank FD, which is giving a 5% rate of return, then my monthly income will be 1 lakh rupees. So you can note down these things, whether you have a term insurance or not, or your spouse having a term insurance or not. If not, this is the first thing you have to learn from this meeting, that you should have a adequate life insurance. अभी क्या है, जो लाइफ इंश्योरेंस है आप सबके पास में होगा, बट कुछ LIC की पॉलिसी होगी या HDFC या ICICI या मैक्स की पॉलिसीज होगी. There may be a traditional plan or ULIP policies होगी in which the cover is almost 10 to 15x of your premium. तो आपका लाइफ इंश्योरेंस कवरेज शुड बी 1 crore, 2 crore और 3 crore rupees as per your expenses or as per your income. Now we proceed for the second step of the financial planning is you should have a family floater health insurance, and that should be apart from your corporate health insurance. If you are living in a metro, then minimum it should be a 10 lakh rupees. And if you are living in a town or small city, it should be minimum 5 lakh rupees. It should be a family floater policy which cover your your husband and your kids. You don't need to buy individual health policies for all of the family members. There should be a one single policy which is called the family health insurance, family floater policies. So I am launching the next poll. Now, do you think that you have a adequate health insurance like 10 to 15 lakh rupees for medical emergencies or medical contingencies apart from your corporate? I got 20 answers, 21, 22, 26, 27. 33. I'm ending this poll, showing you result. 70% don't have adequate health insurance.
Gaurav, did you expect this?
No, I don't expect this, but in last 2 years, we have gone through a COVID situation. We have seen the death of many people. We have seen the hospitalization bill of 8 to 10 lakh rupees of near and dear ones. Still, people don't have 5 to 10 lakh rupees of basic health insurance. So why I'm not coming to the investments or savings part or mutual funds or equity? Because the people don't have basic the life insurance and health insurance. If they have the foundation of health and life insurance, then they can proceed for savings, investments, or something else. I'm stopping results. So for both of the things, you have to spend only 3 to 5% of your annual income to buy a term or health insurance. It is not more than that. So if you will expense around 3 to 5% of your annual income, then rest of the 95% of your income will be taken care of by savings and investments. Are you agree with this point? You can give me your answer in chat. Then I will start this all about the savings, investments, equities, power of compounding, etc.
Girls, please answer. Is all of this making sense? I think the finance team is only proactive answering. Sonali answering from the day first. Okay, we are getting answers. Swarali, Priya, Ananya, yes. Great.
Okay. Yeah. So total my presentation in 7 steps of initial planning. The first 3 steps of are basic foundations, and then we can start about the savings or investment. And the third step of the financial planning to keeping a emergency fund or making a contingency fund. It should be a minimum 3 to 6 months of your monthly outflow. So you might be having a car loan, home loan, or some personal loan on some extra. So there might be a case in which you are not getting salary or loss of job or something else. So you have to create an emergency fund. But for women, the emergency fund is more than the 6 or 7 months of salary, because they are doing savings. They are not utilizing their funds. So if you are keeping more than 6 months of your 6 months of salary or expenses into your bank account, then you have to take care of it. You can invest into some FDs, debt fund, liquid fund, or something else where you will be getting 5 to 6% of a return. Don't keep more amount into bank FDs. You just keep minimum 3 to 6 months of your expenses. Why I'm saying this? Because I have seen many females, they are keeping around 8 lakh, 10 lakhs rupees or 15 lakh rupees into their bank account. The reason ke kal kuch ho gaya to kya karenge, kal kuch ho gaya to kya karenge. And they are keep telling me this from last 10 years. If you have a term insurance, if you have a medical insurance, if you have a credit card, if you have a contingency fund proper in place, तो आपको requirement ही नहीं है बैंक में ज़्यादा funds रखने की. Because you are working for the money for 12 hours, your money should also work for 24 hours. But our money is not working for us. We are working for money and money is not working for us. So this should be a corrective step we should take up. Now I am proceeding about the fourth step of financial plan. How many of you are doing the savings or investments? You are keeping some amount apart from your salary and you are doing some mutual funds, stocks, FD, PPF, NPS, LICs or something else. I'm getting answer from Anuva, Sonali, Sunidhi, Priya, Riddhi. Okay. So all ladies are very active in investments or savings. So have you planned that you are investing or you are saving, but do you have any clear goal, target, purpose or vision for your investments? What I need to say that if you want to travel from Mumbai to Pune, the distance between Mumbai to Pune is around 150 kilometers, which can be traveled through a car into 3 hours, which can be traveled by plane in 60 minutes. But when you go for a financial planning, so you have to choose your vehicle as per your goals. If your goals for 15, 20 years higher, you can choose mutual funds or equity. If your goals is near about in 6 months or 1 year, you can choose liquid fund, debt fund or FDs. So first you should find out where you stand today and where you want to go. If you don't know where you are standing today and where you want to go, you cannot choose your investment vehicles or your savings vehicle. In 80s or 90s, the parents have only 3 goals of their children. They want to educate their children. They want a better marriage for their children and they live a happily retired life. But अभी जमाना बदल चुका है. रोटी कपड़ा मकान किसी की जरूरत है नहीं. अभी लाइफ स्टाइल एक्सपेंसेस बहुत बढ़ गए हैं और हर किसी के लिए रोटी कपड़ा और मकान से जिंदगी ना मिलेगी दोबारा. हर किसी को नया घर लेना है, नई गाड़ी लेना है, आईफोन लेना है, फॉरेन वेकेशन करना है, स्टार्टअप कंपनी ओपन करनी है. ठीक है, तो हमारे गोल्स या जो ड्यूटीज है, ठीक है, वो चेंज हो चुकी है. ठीक है, अनलाइक 80s या 90s में जो था वो नहीं. अब समवन वांट टू बाय अ सेकंड होम और वीकेंड विला, समवन वांट टू बाय इंटरनेशनल holidays every year, someone want to buy a new car, someone want to be debt free in 5 to 10 years. So these are the basically new lifestyle goals which we have which are presenting right now. So जब भी आप इन्वेस्टमेंट करते हैं, सेविंग्स करते हैं, तो यू हैव टू कंसीडर दैट आपका क्या गोल है, कितने साल के लिए गोल है, आपको कौन से व्हीकल में इन्वेस्टमेंट्स करना है, आपको एफडी करना है, पीपीएफ करना है, आरडी करना है, म्यूचुअल फंड करना है या एनपीएस करना है, वो आपके गोल्स के ऊपर डिपेंड होना चाहिए. अगर आप यहाँ पे अगर आप खड़े हैं और अगर आपको यहाँ पे जाना है, ठीक है, तो ये आपका डिस्टेंस तय करेगा कि आपको कौन से व्हीकल से जाना है. साइकिल से जाना है, स्कूटर से जाना है या 4 व्हीलर से जाना है या प्लेन से जाना है. तो सिमिलरली इफ समवन एज इज अराउंड 30 years and she want to make a corpus of retirement of around 2 crore or 3 crore rupees after 20 years, तो उनके लिए कौन सा व्हीकल सही है वो उनके रिस्क एपिटाइट पे डिपेंड करेगा. बट जो ऑप्टिमम व्हीकल हो सकता है दैट मे बी इक्विटी और म्यूचुअल फंड्स फॉर लॉन्ग पीरियड ऑफ ड्यूरेशन. एंड शॉर्ट पीरियड ऑफ ड्यूरेशन इट शुड बी एफडी और अल्ट्रा शॉर्ट एफडी और लिक्विड और डेट फंड्स. Saurabh, you want to add something?
Not at this point of time, Gaurav.
Okay. I'm launching a new poll. Okay, all your investment which you have did right now are in goal-based planning or you have done it ad hoc basis? I will give you definition of goal also.
Gaurav, I have a question in the meantime. Hi, this is Ruchika. Uh, just a very quick question, and I was really confused about this because these days the FD rates and all the NSCs and all the investment, like these interest rates are around 5 to 6%, and the inflation rate is obviously more than that. And each year the inflation rate is more than the savings rate. So does it even make sense to do savings on the first place, because your money is basically getting eroded by time?
Yeah, Ruchika, if you have the knowledge of asset allocation, then you can park your investments into different parts. I will cover in PDF later on.
Okay.
So I am just ending this poll. I'm showing you result. It is around 50-50, 57% have not done any investment based on goal and 40% are making investments basing on goal. So what are the goals we have covered? But that goal should be specific, measurable, attainable, relevant and time bound. If suppose someone want to buy a home after 5 years, yeah, if someone want to buy a new car of 20 lakh rupees after 5 years, then the goal should be specific. It should be measurable in amount, okay, that I need amount of 20 lakh rupees. It should be attainable. It should be relevant and should be time bound, that I need to save money for 60 months so that I can buy a car after 60 months. But that should be clear. So all your goals should be have a smart ratio. It should be specific, measurable, attainable, relevant and time bound. So if you want to create a corpus of a 10 crore rupees, you need a time of 25 to 30 years. It is also attainable and it is also relevant. We can do anything in investments and savings, but we have to consider all these factors. So the next step of the fifth step of the financial planning is the difference between the savings and the investments. So this is the called savings. If you are saving like this, दादी की आंखों के लिए, बहन की पढ़ाई के लिए या बहन की शादी के लिए. So if you are keeping your money into bank account, it is called the savings. It is not the investments, because you are going to get a return of 3 to 4%. And if you are in 30% tax slab, then if you are making a FD of 5% and if you are paying 34% income tax, then post-tax return will be around 3.5%. Inflation is 7%. So you are losing 3.5%. You are not earning on FD, but you are losing 3.5% year on year into inflation rate. So your investment vehicle should be that they maybe give you a return of around 10 to 12%. So what is savings and what is investments? So left hand side is the savings. If you are keeping your money into a savings account, FD, RD, liquid and debt fund, PPF and post office small savings schemes. That's why post office schemes are called the small savings schemes. Post office की अल्प बचत योजनाएं कही जाती है, ठीक है? Because it is the savings schemes, it is not the investment schemes. And in the right side of the investments like stocks, equity mutual funds, SIPs, REITs, PMS, and ETFs. So what should be the ideal? But before that, I'm launching one poll again. So you have heard about the savings and investments and all these things. So does your spouse, parents involve you in financial decisions? It is the most important question for women, because they are not taking any interest in their finance. They are not taking interest in the investments and savings. I got 27 answers. Last 5 seconds.
Just a small update here in terms of savings and investment basically. So out of my entire corpus or my entire saving, I think only 2% of the amount is lying in the saving sort of the bucket, which is your fixed deposit and PPS and all those things. Rest all 98% presently is lying in the investment bucket.
You are a high risk appetite plan. You have a high risk appetite and you are knowledgeable and you have time also. You have time, experience, knowledge.
I'm just giving a broad.
Yes. Similarly, same with me. I have only 5% into savings bank account. 95% is the invested. But as I consider to different people, it should be a different 50-50 or 30-70 or 60-40.
Exactly.
So I'm ending this poll. I got 32 answers. I'm showing you result. 75% are saying that their parents or spouse are taking financial decision with them. So congratulations. It is good that you are participating with all this financial decision. The 25%, I request you to tell your spouse or your parents that you are knowing something about savings or investment, or you will view some YouTube videos or take some help of financial planner and start taking the decision for the savings and investment with your spouse. It is not the responsibility of only one guy. It is not the responsibility of your father. It is not the responsibility of your husband only. It is the joint responsibility. So these are the reasons why women are not investing. This is specifically only for women. You can pick your answer and tell me in chat box, or you can unmute. Okay, what is your answer? Shileka, your answer is that you don't have time.
Don't know how to start.
You
That
may be one
also.
or two reasons or three reasons also.
Yeah.
And investment is very much complex also.
Yes. Yes.
And someone is thinking that they will start when they have sufficient money.
Folks, you can tell your answers, or
Yes.
rather your reasons.
Okay.
Don't know how to start. See, I have a partner.
Yes. So these are the most commonly excused or most commonly answered, that investment is very complex. My father, husband take care of it, so I don't have time. I don't have knowledge. So that's why you are not doing around some investments into savings and mutual funds. So what you have to do, that if you are earning in 1 lakh rupees, I am taking just an example of 1 lakh rupees. So if you are getting some income at the end of the month, you are, this is the old formula, you are going to expense all these things. And later on, if the 10, 15, 20,000 is saved, you are going to save this into PPF account or FDs or something else. So you have to adopt a new formula, that when you get the income, you did the investments, and after the investment, whatever left, you have to expense them. So it may be that you have to install either this Amazon or Flipkart or some other mobile apps. So what should be the minimum criteria or a thumb rule is that minimum 12 days of your salary should be invested. So if there is anyone in the group who is saving around 10 to 12 days of their salary, it is around 33 to 40% of their income.
Of the monthly income, right?
Monthly, yes. If I am getting a monthly income of 1 lakh rupees, I am saving around 40,000 rupees. 40,000 rupees is my expenses and 20,000 is my lifestyle expenses. So if there is anyone who is saving around 12 days or 40% of their income into investments, not savings, you can take a screenshot of this page, because if you don't invest 40% of your income from now onwards, you have to work by the age of 55, 60 or 65 years old. Everyone is getting only one salary, and we should not depend on the single income. We can do investments and make over second income by doing the investments. And by creating an investment corpus, it should be minimum commitment of 10 to 12 days of your income should be invested. So how we can invest? It is the sixth step of the financial planning, that we can invest into either stocks or mutual funds. We can invest into bonds. We can invest into real estate, or we can keep cash, or we can buy the gold, or we can keeping into savings bank account or FDs. These are the basically 4 assets in which all Indians are the investors. Majorly, the 70 to 80% of our asset is the real estate. It is near about the 76% of total net worth is into the real estate, and 24% into this bonds, cash, and stocks. It is, I am saying, for all over India. So when you make any investments, the 4 things which you should keep in your mind: safety, liquidity, return, and tax efficient. ठीक है, आपको कोई भी इन्वेस्टमेंट ऐसा नहीं मिलेगा जिसमें सेफ्टी भी मिले, लिक्विडिटी भी मिले, रिटर्न भी अच्छा मिले और टैक्स एफिशिएंट भी. It is not possible. You can get either 2 things or 3 things, not all 4. If you are keeping FD, the FD is safe, FD is liquidable, FD return are low, and FD is not tax efficient. You have to pay 30% tax. If you are investing into property, the property is safe. The property return are moderate 7 to 8%. The property you can get the tax efficient after 3 years, but the liquidity is zero in the property. If you are doing some investment into stocks and mutual fund, there is a high liquidity, there is a high return, and there is a high tax efficiency, but they are not safe. They are volatile, they are risky. So these 4 things you have to consider before doing any investments: safety, liquidity, returns, and tax efficiency. So what should be an ideal allocation of income? 100 minus your age should be investments. Investments into equity, direct stocks, ETF, index funds, mutual funds. I will not use jargons. I will try to communicate you in simple language that 100 minus your age should be investments for long term. Your age equals to savings. Savings means FD, RD, post office small savings schemes, PPF or NPS. These are considered to be a savings. So I will not ask anyone her age, and I will say that 100 minus your age should be. Just for example, my age is 39, so I'm saying that 100 minus 39. So my investment portfolio should be 60% and savings portfolio should be 40%. And my father is 65, so for him, the 30% should be around savings investments, and 70% should be a savings portion. So you can subtract your age minus, you can subtract your age from 100 and get your equity allocations. And for Saurabh, it might be 100 minus 2. So अभी हम ये पता लगाते हैं कि आपका फाइनेंशियल पोर्टफोलियो आज की डेट में कितना होना चाहिए तो कितना है. It is a simple calculation. You can take a help of calculator, mobile calculator. What you have to do, your current age into current salary, yearly salary of last 3 years average, divided by 20. It should be your financial portfolio as on today.
So the salary is monthly or the annual salary?
Yearly salary.
मेरा तो monthly पे भी नहीं बैठ रहा.
No, yearly salary. If suppose my age is 40, my current salary is in 20, so 40 into 20 divided by 20 equals to 40. So I should have minimum 40 lakhs rupees of financial portfolio. If anyone can calculate and give me the answer. Ruchika says that 4273500. Okay, so you should have a portfolio of 42 lakhs right now, including your provident funds, PPF, NPS, your life insurance policies, your FDs, mutual funds, ETF, each and everything. So if your answer is 40 lakhs and if you have a portfolio of 20 lakhs, then you got a 50% mark in your exam. This is a simple illustration that I thinking that you are working from the age of 25, you are earning X amount and you are saving 30% of your income and you are investing 25% of your income. So if you are getting a 10,000 rupees, if you are getting a 1 lakh rupees, you are just investing 25,000 rupees per month. So on this parameter, this financial portfolio can be considered. So Sileka, you are also doing some calculations.
Yes, I'm noting down the formulas and I'm calculating.
Okay. And if you want to know how much is total overall the portfolio is current age into current salary divided by 10, you can include your real estate also. By 20,
by 10.
Yes, by 20 is only for the financial portfolio, not for the real estate portfolio. Now I think many will be getting answers. They are about 60 or 70, 80%, because each and everyone is invested into properties. So now the last step of the financial planning, that how we can get the financial freedom. So this is simple illustration that जब भी आप कुछ भी funds investment करना चाहते हैं तो just आप इस rule of 72 का समझे. It is that 72 divided by the rate of return is the number of the years in which your money will be double. If you are keeping some amount, if suppose you have a 1 lakh rupees into your bank account, you are not going to touch for next 24 years. So 72 divided by 3, around 24 years it will take to double your money. So this will be an eye opener for those who are keeping money only into their savings bank account. So if you have a 5 lakh rupees and your age is 31, so after 24 years, when you will be around 55, your money will be double, 5 to 10 lakh rupees. So you have to consider this when you are going to invest in lump sum amount. If you want to invest your bonus amount, if you want to invest your incentives for some lump sum amount like 50,000, 1 lakh, 2 lakh or 5 lakh rupees, you have to consider this slide. If someone who sees keeping 5% of FDs, then the money will be double in 14 years. Ruchika has asked me questions. So FD is suitable for those who don't want to take any market risk. So if you don't need any, if you don't want to take any risk, if you don't like the volatility and you are happy with 5 or 6% kind of a return, then you can go for FD. And if someone is doing investments into mutual funds, then the amount may be double into 7 years. It may be in 6 years also, it may be in 9 years also. But this is giving you some illustration that when you invest the money for lump sum, you have to consider this fact. This is called the power of compounding. You can take a screenshot or pic also is. Why we need to do the financial planning? Because the education cost of today, it is the minimum inflation of education is around 8 to 9%. So after 10 years, it will be around 22 lakhs or 25 lakhs or 30 lakhs as per the course, as per the city, as per the education, as per the university. So if you are saving only, then in 10 years, your money will be double by 10 lakh rupees. It will take around 15 years to double off your money in FDs. And your cost will be double within a 7 to 8 years. Similarly, for retirement planning, if the monthly expenses of 25,000 rupees today, after 20 years, it will be around 1,16,000 rupees. So your money is going to be double in 15 years. So you cannot do a proper retirement planning with this amount by doing only savings. So you have to do savings and investment both. So suppose your age is 30, so you should spend 30% of your income into savings, 70% into investments. By investing into the mutual funds or equity mutual funds, someone can create a corpus of 1 crore easily in 10 or 20 years by doing an investment of 10 to 15,000 rupees itself. But what mistakes we do? By the age of 25, our parents just buy LIC policies for us. By the age of 27, we bought a new car, we bought a new home, or we take a new iPhone on EMI, and we spend over 15-20 years to paying only EMIs. And we realize at the age of the 50 that we have not done enough savings or enough investments. So you can start with only 5,000 rupees or 10,000 rupees for a longer period of time. So Shileka, might be your age is around 25-30 years. I'm taking your example because I know you. So
yes, please go ahead.
Yeah, so if you want to be retired, after 20 years and you need a corpus of 3 crore rupees, so your family investment should be 30,000 rupees into some mutual funds. So if you are investing 30,000 rupees per month, so after 20 years, you might have a corpus of 3 crore rupees. So just my idea is that we can make a crore, we can make around 2 crore or 5 crore also from investments. But the one thing which is required is the time. It is not the money. In last 36 years, many mutual fund companies has given such kind of a good return, around 12% to 25% return. But there are only less number of investors who enjoy the returns. Because people don't invest into stock markets because of the greed, because of the fear, or because of the some psychology. Why they are not investing? Because their parents are investing into some LICs or PPF or post office. And that's why they are also investing into the same avenues. This is the second last slide. What we have an expectation into equity market and mutual funds investment, and what is the reality in both the asset class. So if you are doing investments into FD of 10 lakh rupees, your rate of return is 5%. For next 25 years, your corpus will be 34 lakhs only. And majorly of you have a 20 or 30% tax bracket. So if I deduct the 30% tax, then the net future value will be only 25 lakh. So you put 10 lakh rupees, you wait for 25 years and you got only 25 lakh rupees. This is the one thing. Second, you put some money through the help of some financial advisor, financial planner, or someone who knows better than you, you take the advice, you invest into some mutual funds or some instruments where you are getting the 12% kind of a return for next 25 years, your corpus may be around 2 crore. If the rate of return is around 10%, then the corpus will be around 1.5 crore rupees. So it is almost 4 to 5 times better than this FD. But when you have a short duration of your goal, like in 1 year, 2 years, or 3 years, or 6 months, then you should park all your amount into liquid fund, debt fund, or FDs. When you have a future goals like you want to make a corpus for your retirement, you want to make a corpus for your children education, you want to buy a new home after 10 years, or you want to buy a home, a new car after 7 years, then you can park your money into mutual funds. In mutual funds, the journey is not simple. It will be up, down, and up, down. Many psychological factors like greed and fear will come to you. So you need a help of financial advisor who can handhold you, who can guide you, who can mentor you, who can train you, who can educate you, empower you through from today, from itself to next 20 years or 15 years to your goal. It is not easy to plan your money by yourself. So you should require some experts' advice. And if we consider a monthly investment of 25,000 rupees for 25 years, the corpus into FD will be 1.5 crore. Post-tax, it will be 1 crore. And in mutual funds, it may be around 5 to 6 crore rupees after 25 years. So mutual funds has given the returns, equity has given the returns, but the less number of the investors, hardly 5 to 6% of the investors who have enjoyed such kind of a return. Because mostly we have invested into LICs, mostly we have invested into the properties, or mostly we have invested into some PPF or post office or something. I'm not saying that something is bad or something is good. We should have a right asset allocation. If someone age is 50, she should invest 50-50. If someone age is 30, it should be a 30 or 70%.
There is one more thing, Gaurav, I want to add here.
Yeah.
Let's say if someone has started not even at 25,000 per month or 15,000 per month also.
Yeah. Also, even a 5,000 rupees also.
Hear me out. Let's say one has started 25,000 rupees per month. At a 12%, the return would be what, somewhere around 5.5 crores.
Yes.
Right. So another strategy could be here that start with, let's say, 5,000 or 10,000, and on the basis of your annual increment, since we all are in the job, right? So on the basis of your annual increment, increase your monthly investment from, let's say, if you start at 10,000 rupees itself, 10,000 go make it 15,000, make it 18,000, make it 25,000. The more you grow your investment amount at the annual frequency of the every year, this future value is tend to increase itself. So it's
100%.
So it's not that you need to start at 25,000 only.
No. I'm just giving an illustration. Yes. No. I'm just giving an illustration. If you want to make.
Hold on. So it's not that we need to start at 25,000 only. The only requirement is to start, because the longer your duration, the more will be the compounding part of it. So it's absolutely fine to start even at 5,000 also. Next year, increase it to 8,000, 10,000, 12,000. And then in a period of 15 to 20 years, you will see the miracle. In my personal example, I mean, I had started investing since 2010 or 2011 maybe. In past 11 years, I have seen the annual average return of more than 18%. I'm not saying we will be able to see the 18% on an average basis for the next 10, 12 years, but 10 to 12% would be minimum if you invest wisely into the investment sectors, not into the saving sector, basically. Yeah, Gaurav, over to you.
Yes. Same thing that I am also saying, that if you can invest with the 5,000 or 3,000 itself. So taking action is more important than just getting the knowledge on the YouTube or Zoom meetings or some webinar. In last 2 years, we have almost done 100 or 200 or 500 Zoom meeting we have attended. We have taken so much of the screenshot, but we have never gone through the screenshot again and again. So the most important thing is the taking action. That's why you should consult your spouse, you should consult your parents, and take a decision that I will be involving in savings and investments from now onwards. You take this responsibility from this Women's Day. And the last thing, so we have around 37 members. So if you want to avail and 30 minutes of free financial consultation with us on Zoom meeting 1-to-1, then you can give me a message, hi, I'm just showing me my number, so that we will be doing a financial consultation as per your age, your objective, your risk appetite, that how much you should invest, how much you should save, what type of term insurance you should take, what amount of sum assured into health insurance you should require. So I will be guiding you all these things in 30 minutes, and that should be on 1-to-1. So you can save my number, or you can send me a message, hi or hello, at this number. Now we are open for question answer.
Thank you, Gaurav, for this elaborate explanation on financial planning. So yes, folks, we have 10 minutes. Can we have the questions for Gaurav right now?
Shilaka, if someone needs my number, you can forward my number,
Sure,
because
sure.
I have just closed this presentation. Yeah.
Sure. Yes, Namrata, go ahead.
Hi. I mean, I wasn't able to see much of I was on another call, so I joined later. I just wanted to know what's your